Good evening. This is Richard Peterson on a screencast given on September the 9th, 5:47 p.m. Dallas, Texas, Central Standard Time. All right, I'm going to describe this chart today and how we'll be trading in the future. There was a loss today, and I obviously apologize to you for that. And here's what we're going to be doing from now on. It's a more conservative approach, probably the most conservative approach to trading, and I'm going to point out exactly what my thinking is. First of all, we're only going to be using 15-minute intervals. That gives time for the candles to form themselves. I've also implemented a policy of zigzag trading. I went all the way back to this date at the US 500, September the 6th. Let's go with Wall Street 30, which we traded today. The zigzag actually formed again 9 o'clock, September the 6th, and went all the way up today to 15.081. So you can see that the market went up. People are saying it's because of Syria and the possibility of having a UN team out there to investigate. I really don't care. I just know that the market went up. And using this approach, it's called zigzag charting. We have to go back, to September the 6th to see where this forms. And when we do, we can see it's a straight up move. We will only be trading from extreme points from now on. In other words, the only time you will see a trade from me will be when the market is at an extreme low. And you can see that on this day we would have won. Even at close, it never came down that low. And of course, we'll see what it does tomorrow, but we'll be trading from an extreme point high. As you can see, it's high right now, and we'll see where the market is overnight, and we'll also see where the market is near the opening bell, which will be sometime around, right here, I guess. We're on 15-minute charts, so this is the middle of the night. And by the way, I do get up in the middle of the night, but long about here, long about opening bell, we're going to see where these candles fall in relationship to the Fibonacci chart, but more importantly, we're going to see where they fall with respect to the extreme low. Now, I'm not saying we will or will not trade tomorrow. Obviously, I want this line to come all the way back down here, but it may not. It may stop here or it may stop here. We don't know. We have to watch the market. But I want to see significant drop in this. In fact, let me draw it now and show you where I'd like to see it go. I'd like to see it go from here all the way down here and institute our buy, of course, at 14,820, which would have been a very safe. If the market does that, it would be a very safe buy. Let me color that line black, and I'll be saving this chart. And this will be the trading method we're going to be using from now on in this market. We're going to be trading extreme points in the chart. We're never going to be trading during the day where there is too much volatility, as you can see. It kind of looks like a pyramid, doesn't it? But here we would do a sell contract with Nadex, and we would obviously hope that this would go down overnight in a consistent fashion. If not, I'll rearrange the chart so that when the bell rings and tomorrow morning, we'll see where we are with respect to these extreme positions, and we're going to buy from the extremes. We're going to buy extremely low or extremely high. Think of this like an elevator. You're getting on at the ground floor, and you're buying it all the way up, and then when you're getting at the top floor, here you can sell your contract on the way down when you see it's not going to go any higher. These zigzag lines are extremely powerful. They go back several days. To do a zigzag, you have to go back 2 or 3 days, like on September the 6th. And today is, of course, September the 9th. And you can see the formation here very clear. I've examined all of the trades over the last 2 or 3 days based on intraday trading and events that are happening in the market, and quite frankly, I really don't care. I do care, but it doesn't matter to me. If these lines are not forming, I'm simply not trading. If I don't see a long line moving up and a long line moving down. If these candles don't trail this down far enough for me to be confident to offer a sell signal, or if they come all the way down, confident enough for me to draw another line, the candles would come all the way down here, then they would do a buy signal. Now this means that your signals are not possibly going to be given every day. But there's no law that says we have to trade every day, folks. And I trust that with this new method of trading, and also this is very important, I want to give Chris, a member of my mastermind team, credit for this. Very powerful directional movement. You can see here that the market is moving up with the blue lines, and it is reaching its peak. It's still at its peak. On the Wall Street 30, again, the market moving up, so you know for certain that you do have an uptrend or an up move, thanks to Chris, and that's now on all of our charting. The US Tech 300 is a little confusing here on the directional movement, but you can see eventually it established itself. Here it was really too narrow, but you can see where it did. Let me get this straightened out here. You can see where it established itself on an up move right in here, and that's pretty clear. That would have been a good point to buy, perhaps right here today. But the chart was not plotted that way, and that's the reason for the loss. It's my view, in talking to my mastermind team, one of whom is a gentleman in Chicago who sits on the Board of Trade, that these markets have to be traded over a 2 or 3 day span of time in order to be safe. What happens here at the very end is determined by what happens here. Here is your tidal wave right here. This is the earthquake that moves the market up. And the programs, the computer programs, the black box programs are, believe me, they're programmed here to buy this all the way up. So we've ridden this all the way up. We should have ridden this all the way up today, which was September the 9th. We should have gotten in here. These are the midnight hours, but most certainly we should have gone in here at 8:30. And possibly we would have gone in here, well, 8:30 would have been a good time to go in, because the market, looking back now, we didn't see this going that high, but looking right in here, which is all we could see the blue lines forming and the direction moving up. So this would have been, and of course we knew that the zigzag was all the way down here and had to be moving in a direction upwards. I could have drawn the zigzag anywhere along here, and it would have been an upward move. No, that sounds a little complicated, but I think you're going to see a dramatic improvement in our trading results as a result of it. Thank you. I hope you enjoy the video. If you have any questions, please give me a call on my mobile phone, 469-230-1205. Okay, thank you very much.